The biggest tax changes in years are here. Some will save you thousands, others are disappearing forever. Here's what you need to know before it's too late. Hey taxpayers, it's Tiffany Gonzalez CPA here, and as you may know, the big beautiful bill was already signed into law by President Trump on July 4th, and it's one of the most sweeping tax overhauls we've seen in years. Over 100 tax sections. Big changes for families, for small businesses, and even for green energy. Some of these changes kick in right away, others in 2025 or 2026, and most of them are here to stay. So let's break down what this actually means for you, for your family, and for your business. And don't worry, it's going to be without all the legal jargon. The One Big Beautiful Bill permanently extends most of the tax cuts from the 2017 Tax Cuts and Jobs Acts, which were set to expire this year. It also sweetens some of them. It introduces brand new breaks, and on the flip side, wipes out a lot of the clean energy credits from the 2022 Inflation Reduction Act. These are changes to deductions, to credits, to business write-offs, to even estate taxes. Think of it as a total remodeling of our current tax system with a few brand new rooms added and a couple of green energy rooms completely removed. First up, let's talk tax rates. They're staying the same. C Corps will still pay 21%, individuals will still top out at 37%, and the alternative minimum tax easings are now permanent. But your standard deduction will be bigger starting with your 2025 tax return. Married couples that file jointly now jump to $30,500, singles to $15,750, and head of household to $23,625, with even more of a standard deduction if you're over 65. Now, if you're a parent watching this video, the child tax credit is getting a raise. For 2025, it's $2,200 per child instead of $2,000, and it will now adjust for inflation every year. Lower income families can get up to $1,700 of that as a refundable credit. Social Security numbers are a must for the parents and the child to claim it. Childcare is also getting a big boost in 2026. The child and dependent care credit will increase to $1,500 for one dependent or $3,000 for two or more. Dependent care FSAs, flexible spending accounts, will let you set aside up to $7,500 pre-tax. That's a jump from $5,000. And for employers who help cover childcare, that maximum tax credit has skyrocketed. So this is for business owners that set up like a daycare at their business. There's a really big credit for that. 529 college savings accounts, they're expanding too. Starting in 2026, you can withdraw up to $20,000 per year tax-free for K through 12 education. And the list of eligible expenses is much longer, from tutoring to AP tests to educational therapy. Now, I'm not a big fan of taking out of your 529 plan for K through 12. The reason being is when you contribute to a 529 plan, you're looking for the growth. That's where you're getting the tax-free. So if you're putting money in today and taking it out tomorrow for K through 12, there's going to be very little growth happening, so very little tax savings. And here's something new, the Trump account. Beginning in 2026, parents can put up to $5,000 a year for a young child, and the government will automatically chip in $1,000 for kids born between 2025 and 2028. It's not deductible, but the earnings do grow tax deferred until withdrawal. Between you and I think this is the government's incentive for more people to have children. I think less and less people are having children, or they're having them later in life. And this is the government's way of trying to boost the baby deliveries. The estate and gift tax exemption, it's becoming permanent and bigger. In 2026, it jumps to $15 million per person, with the 40% top estate tax rate staying the same. This is huge for generational wealth. More people can die over the next few years with lots and lots of wealth, and it won't be taxed. For investors, the small business stock gain exclusion limit is being raised from 10 million to 15 million, and you can qualify with just 3 or 4 years of holding instead of 5. Now here's the flip side. Some major green energy tax credits are going away. You know that famous $7,500 for an electric vehicle? Gone after September 30th, 2025. Same with the commercial clean vehicle energy credit. Energy efficient home improvement credits, those also vanish after 2025. So if you've been eyeing solar panels or a new energy saving HVAC for your home, you'll need to get it installed before the end of this year, 2025, to claim the credit. Businesses are some of the biggest winners in this bill. You know that 20% qualified business income deduction that you've been enjoying? Well, it's now permanent. And in fact, it's slightly better. Section 179 expensing now doubles to $2.5 million that can be written off in the first year. And guess what? Bonus depreciation is back at 100%. You can write off the full cost of eligible assets right away. R&D expenses, they also go back to full immediate write-off. And the Opportunity Zone program, which basically lets you defer capital gains by investing in struggling communities, it's now permanent too. On the compliance side, you know that dreaded $600 Form 1099-K threshold? It's been repealed. It's back to 20,000 and 200 transactions. And the threshold for sending out 1099 NECs, this is big, goes from 600 to 2,000 in 2026. That's unheard of. For years, the 1099 NEC form was at the $600 limit, and it's now much higher. One thing that is new is a 1% excise tax on money transfers abroad by non-citizens starting in 2026. Most US citizens and permanent residences won't be affected, but it's something to watch if you regularly send money overseas. So, bottom line, this one big beautiful bill makes the 2017 tax cuts a permanent part of the tax landscapes. It adds all these new incentives for families and businesses, and then it wipes out many green energy perks. And with most of these changes set to last for years or even decades, now's the time to rethink your tax strategy so you can take advantage of what's coming. If you found this breakdown helpful of the one big beautiful bill, hit that like button, subscribe to our YouTube channel, follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.